Hey everybody, welcome to Trading Capital's daily analysis video. I'm your head market analyst here. Jumping into the charts on this February 14th. Happy Valentine's Day. Happy CPI Day. So the CPI came in hotter than market expectations. We'll just jump in right into the data. So CPI coming in hotter than expectations. That's kind of negative. We did see home and shelter have a big increase over that 2 months, but yet stocks continue to move higher. And in particular, it was the NASDAQ, the QQQ that moved higher, actually being the big winner. Tech was the big winner today. Now, it's kind of ironic that tech was the big winner on the day. And this is bullish consolidation on the NASDAQ right now. You are still holding above support and putting in a potential base to move higher. Now, I don't think we're going to move much higher from here. I still think this is big resistance, as well as this pre-COVID yellow trend line over here that we're trading under. So perhaps you can still get a little bit more of an upside to this 310, but in the face of stocks moving higher today, and why it's so ironic that tech is moving higher, because when you simply look out and what the bond market is seeing, the bond market was utterly destroyed again today. It doesn't matter if it is short yields, long yields, it was destroyed. Look at this massive technical breakout on the 2-year yield, pushing up over 4.62%. Again, beautiful consolidation break. This breakout is confirmed, and you're likely heading to the previous pivot high and potentially even higher. The importance of the shorter end yield rallying up over 2.17% today is the fact that it's going to also carry and push and force long end rates up. So when we look at the 10-year as well, the 10-year did not get a technical breakout, but still maintaining bullish consolidation, and you were very close to pushing higher. I still think at the minimum the 10-year gets to 3.87 year, and with the 2-year yield breaking out, it's only a matter of time before this likely pushes higher. Perhaps it's just waiting for retail sales tomorrow and extra employment data. Even if you look at the 20-year yield today, that did have a rally, but it did not confirm the breakout. It did pull off from the highs. So realistically, what the 2-year yield is showing is that there's still a tremendous amount of risk in the short term compared to the long term. And this is implying that now the Fed needs to raise their rates and continue to increase the Fed fund rate. And the market, the stock market at least, is not buying it. You did have TLT down and a variety of the bond plays getting smashed due to the rising yields, but this breakout in yields likely carries us higher, and it's likely going to force this bullish pattern to break out. Let me just erase some of these trend lines here just so we can see, but the dollar is still holding this beautiful bull flag. I thought it was going to break out today on the CPI reading, but the fact that you've had now one attempt at a sell reversal, another attempt at a sell reversal, the dollar wants to stay in this range and likely head higher. I still think that you have this channel that connects this pivot to this chop and consolidation breakdown to this pivot high here. I still think at the minimum you get a pop to 104.76, then likely 105.58, and potentially all the way up to this 107.80 where there is a technical gap. This is a beautiful bull flag forming, and it's looking primed and ready to break. It could even break tomorrow or sometime this week. You are now approaching 1, 2, 3, 4, 5, 6 days of consolidation. That is a balanced consolidation in this pattern. And barring any crazy moving yields, this is looking primed and ready. So I would be cautious if I was buying tech up here, especially when the yields have surged and broken out to the upside. So obviously, the stock market is kind of trading in a mind of its own. That's probably due to the overall options expiration at the end of the week. Obviously, a lot of puts and calls expire worthless if the market makers drive the price action to that max pain level. Now, perhaps just due to the lack of volatility today, although there was a pretty big swing intraday, you had a high, you had a low, and then you rallied off, but you closed off the highs. So this is volatile, this price action, but really we've been stuck in a range for the last week. We haven't really gone anywhere. And I do think that there's people trying to play the upside for a breakout. So there's a lot of calls moving into options X. And then there's also a lot of puts to the downside. So perhaps just teetering in this range is going to create that max pain level where people think we're going to get exceptional volatility. And maybe we don't really get any crazy daily volatility to really wreck or change the pattern of this chart. My overall thesis, I still think we have to at least test this retrace of support back down to 398. I even see us going down to 391 potentially over the next 7 trading days. So that's my thesis. Based off of options X, market makers can defy stocks and keep them buoyant for a little bit longer. They could typically diverge stocks from the yield market and the bond market for a short period of time. But eventually it does mean revert back to what the bond market is saying. And the bond market right now is getting demolished, especially over the last week. And you look at the SPY really hasn't gone down. So there is a divergence occurring between bonds and stocks yet again. Obviously, some power movers like Tesla up on the extremely high on the session, even getting a lift in the after hours off of some bank raising their forecasts. So it's funny how you didn't really see any banks raising their forecast down here to Tesla. Now they're raising Tesla after it's had an over 100% rally. So I do think that's interesting to see. Let's take a look at oil, because oil's showing some interesting price action. We obviously got the Biden announcement yesterday, which dumped oil right at resistance. Oil did try piercing this level, but closed back above inside that level. So we're really just stuck in a range. As soon as you approach this apex, you're likely going to get a move to the upside or to the downside. My thesis is still to the downside around $65, 66 maybe, and I think that's going to be the next potential level on oil. Natural gas is starting to perk up a little bit today, which is obviously good to see. Let me just flip to the other chart here. So natural gas has now creating a little bit of an intraday potential breakout. So we touched base on this on the hourly chart in our previous video, and basically natural gas was bubbling up at this level. It failed, still held this upsloping wedge pattern, made a higher low, and now it's actually broken out to the upside, and it's actually confirmed on the hourly chart a breakout. Now the level that you want to see on the daily chart is you want to see a secondary daily close above this level tomorrow. Potentially even just a slight positive daily close confirms the technical breakout on the daily, and it likely sends you up to $3.02. But let me be clear, this trend is still a mean downtrend. Just because you confirm a technical breakout doesn't mean it's going to be a straight shot up there. You could have big profit taking drops, more liquidations. But in terms of natural gas intraday, it is looking primed and ready to continue to go higher. I think at the minimum we see this 285 now that we've broken out, and then the max, and then the actual fulfilled upside of this little basing formation takes you to about $3 on the chart. And then we would have to wait and see what type of pattern develops from there. We would need some, if we move straight up in here, we would need some sideways consolidation to move higher. But nonetheless, it is good to see that natural gas is starting to perk back up. Look at the UNG. The UNG is very similar, breaking out of that wedge pattern, and will be in the money in no time if that pattern confirms the breakout. Taking a look at gold, gold had some interesting price action because gold made a new low today. A new low was triggered on gold today, but you did not close, you did not make a new closing low. So short-term positive that you did not confirm the break. It was very, very close. However, if you look on the intraday 4-hour chart, you can see that basically on the 4-hour chart, gold did make a 4-hour closing low, a new 4-hour closing low, which is a time frame I like to use. And it's important because it does show you the sheer power of this little rally that gold had, and then you reversed it and engulfed it. So again, there's a lot of negative price action in gold, which is occurring, which is putting into our thesis that it's likely we're going to see this dollar breakout to the upside very soon. I am getting buy orders on the 1 hour, 2 hour, 4 hour, 3 hour charts on the Dixie. So I do think that there's going to be a move in the Dixie to the upside very, very shortly here. The likely scenario is this bull flag break, considering you've had now 1, 2 failed attempts and you just keep getting put right back in that range. But I do think the Dixie is going to have a near-term breakout very, very shortly over here. Really, if we touch base on Bitcoin, Bitcoin started to rally as well in the market. Bitcoin, you can clearly see it bounced off of support here. Now what I'm watching is potentially for a retrace back to this level here. Let me just draw this trend line. You can see Bitcoin hit this pivot low and bounced off of that. So that's going to be your next big resistance. As long as Bitcoin trades under this pivot over here, you're technically putting in bearish consolidation to move lower. If you also draw another secondary trend line, you can see that there might be some additional resistance on Bitcoin if it were to come up a little bit more. If you were to draw that trend line in, connecting kind of this pivot or kissing it there, you can see that Bitcoin is tagging that resistance trend line now. So don't be afraid to move around and play with trend lines to see where resistance is. But nonetheless, Bitcoin has had a tremendous bounce and currently ignoring the yield market. Again, stocks don't believe the Fed, and I think the bond is starting to believe the Fed, and typically the stocks are the last one to the party. So we'll just have to see if they start coming in at all. But technical breakout on yields should be very, very concerning for those risk equity investors. There were a couple earnings after the bell, like Airbnb popped, TripAdvisor, Devon Energy's down, Upstart is slightly positive. But other than that, we did manage to take profits on our PLTR today. So that was a beautiful, beautiful job shorting that in the after hours. Basically, we covered it in a one-day trade for 10.6%. So we shorted it yesterday in the after hours. Let me just pull up Palantir here. Obviously, Palantir was a great trade, and it's actually bounced back up to that level. But we shorted it in the after hours yesterday when it had a pop up here and was able to cover it all the way at the lows of the session intraday. Down over here, we covered around 826. So pretty much nailing the almost exact low, and that was a magnificent trade. And look at this rally. Boom. It bounced back up right into our short level. Are we short again? Yes, we are. So wonderful job rinsing, repeating one day. These are the trades I love to see. The volatility is immense. The fact that you had a massive pop, big sell-off, cover our short, rit rallies, cover it or go short again, and we're in the money now again. So wonderful job. I do think these markets are on borrowed time. Perhaps we're waiting for just Nvidia to top out on its earnings. That might be the one thing that it's waiting for. Nvidia is just teasing this little gap fill over here, still stuck into resistance. We still got the technical sell signal. It's had a near perfect retrace over here, but still remaining strong on Nvidia. It's almost like these market makers are trying to suck in as much money. Obviously, the big level I'm watching is a confirmed break above this weekly hammer candle. Until then, this resistance is still technically intact. Nvidia earnings are reporting coming up in about February 22nd. So we still have about 7 more trading sessions until that date. But we'll just have to be patient and see next Wednesday what that reports. But we may not see Nvidia break down until they report their earnings. Market is priced in a fabulous earnings report, even though this one was negative. So any sort of weakness that creeps in, you could see a big dump on Nvidia. Even if Nvidia earnings were strong, the fact that it's had a rally, the market has priced in strong earnings. So it leaves that risk to reward ratio very, very in favor of the risk side in terms of this dropping, because any sort of kerfluffle, any sort of bad forward guidance, any sort of miss, and the market will sell this stock off very, very quickly into this first support range. Other than that, it was a great day for tech. Obviously, that was the leading stock or the leading sector and leading stocks. Basically, you still saw a little bit of weakness in certain sectors, but with the yields moving higher, breaking out, the dollar putting in bullish alignment, I'm going to just warn you that I think these markets are on borrowed time. We can see the divergence continue into options X on Friday, but again, these markets are on borrowed time. This bullish consolidation and price action in the currencies and the yield market is certainly not something to mess around with, considering now the bond futures have now changed and completely reversed when they expected the Fed to cut. Now the bond market is no longer pricing a cut in 2023. So that's just how drastically things can change. And obviously, I'm going to be watching the retail sales tomorrow at 8:30. In terms of the QQQ level, you could go up to gap fill, but this is big time resistance around this 310 area, 311. Support, you still basically bounce before that support. So if you come down straight into this level, you may get an intraday bounce off of that level. The level that I'm watching on the SPY are basically this level to the downside and this level to the upside. So we have our resistance, we have our support, and I do think that we're going to get a near-term break very, very shortly here. So other than that, congrats on the trades that we won today. Considering we're not short the market and markets had a decent rally across tech, our account still did really, really well due to the profits that we were able to get. We had a lot of cash freed up. We added to a variety of different positions. So if you're curious to see what shorts we're accumulating, feel free to check out our website at tradingcapital.ca, where you will be able to gain exclusive access to our analysis, trades, buy orders, sell orders, and everything else in between. On that note, take care, everybody, and we will see you on the charts tomorrow, 8:30 a.m. Look out for that retail sales data.